Welcome to the Fund Selectors podcast with me, your host, Lucy Walker. I am a huge supporter of the voice of the fund buyer, and this podcast delves into the minds of the biggest and best we have in our industry. Today, I'm delighted to be joined by Carly Moorhouse, award-winning fund research analyst at Quilter Cheviot. Quilter Cheviot is one of the UK's largest wealth managers with 28 billion of assets under management. But the thing I think is most interesting, that they really care and believe in fund research. They have a team of 9 led by Nick Wood, and that team is probably the biggest or one of the biggest in the industry. This episode with Carly, I think, illustrates some of the ways in which a team of that size is able to leverage their additional resource by generating greater outcomes for clients. Carly won Fund Selector of the Year last year at the Women in Investment Awards. She remains incredibly humble, making her even more endearing. And our episode dived into topics such as trust, such as the importance of meeting managers face to face, of boutiques, of course. I can't go too many episodes without mentioning boutiques. And also Carly mentions the golden rule for why or what fund managers should not do in manager meetings. There was a really interesting thread throughout the discussion with Carly, one really leading to me to think that she has a very human way of doing research and of thinking about things. And actually the book recommendation that she has at the end gave me an inkling as to why she might have that approach. I hope that you enjoy the episode as much as I did. All right. Hi, Carly, and welcome to the Fund Selectors podcast. It's great to have you here.
Hi, Lucy. Thank you for having me.
My pleasure. All right. Well, let's dive straight in. So I want to get under the skin of Carly Moorhouse, the fund selector. So let's start with how you think about things. Are there tenets that you kind of abide by, principles that you have that kind of guide the way that you select funds?
Yeah, so I think first and foremost, when I am looking for a new fund or meeting with a new fund manager, um, you know, one of the most important things for me is really trusting that person. I think that, well, I like to think that I'm quite a good judge of character, and really feeling like this is somebody that I would very happily be able to give my money to, my family's money to, to really trust that person that they're going to be, a good steward of that capital is, something that I find is incredibly important. Another thing that I really look for when I'm meeting with fund managers is passion. So I do really want to see who, or meet with people who are incredibly passionate about what they do, incredibly passionate about their philosophy, which I'll come on to in a minute. But also, why is that their philosophy? Why is that something and that way of investing? Why do they believe in that? Because obviously that can be quite difficult at times to really stick with your philosophy when it's going against you. But if they're really passionate about it and they really believe in it, then it makes it a lot easier to do so. And then finally, that brings me to, obviously, as I just said, a philosophy that they really believe in and that they've built a whole process around that they can stick to in the difficult times.
Nice. So trust, passion, and their philosophy, the belief in their philosophy, and probably now is a time when a lot of managers are probably questioning, or maybe hopefully not questioning, but are perhaps being tested on their strength of conviction in their philosophy, given what we're seeing in markets just at the moment. Interesting. Trust is a super important one, isn't it? Because it's like that phrase about reputations. It's kind of it takes a long time to build one, but it takes seconds to break one. So be interested to dig into that a bit, just to really understand what is it that a manager can do to help to build trust, and what is it that they can do that would destroy your trust with them.
Yeah, I think in terms of building trust, for me, I think you just want a manager to be themselves. And, there there isn't just one way of investing, one correct philosophy, one correct process. Otherwise, obviously, everyone would do it that way. So it kind of comes back to my last point of, you know, this is a philosophy that you really believe in, and you shouldn't have to, bend that in any way to suit me as a fund selector. It might just not be the correct fund for me or strategy that I'm looking for at that point in time, and that's completely fine. So I think just really, being themselves, really trusting in their own beliefs and their philosophy, and then also, when times are quite difficult, which they will be, I'm sure, from time to time, to be able to, really own that. I think that's something that, I place a lot of emphasis on as well. Being able to explain why something didn't work, and having a bit of humility in that, and on the other side of things, being humble when things do work out. So I think those are things that, I really look for. And you know, I think that, you know, in a world where we do a lot of things, on Zoom and virtually, I do still place a lot of emphasis on meeting managers face to face. Being able to, sit in a room with them. It's not just about the things that they're saying, but also being able to, analyze their body language, those types of things, which, it all builds this much bigger picture.
Yeah, it's definitely COVID definitely interrupted that as an approach, but yeah, there's definitely a special something about meeting somebody in person, and that kind of added, yeah, you do lose something, don't you, through only ever having sort of Zoom conversations. So I was really I really like the way that you put it in relation to thinking about, your own money and your clients' money, or your family's money, sorry, because
Mhm.
obviously you're selecting on behalf of clients. And I thought that was a really nice way of framing it, because I think so often as as an industry, we're actually quite far removed from the end client. So yeah, I didn't have a specific question, but I just wanted to kind of call out that as being a really, I think, a really positive way of walking into a meeting and thinking, would I trust this person with my family's money? Because I suspect that probably doesn't happen as much as it should do. So when it comes to trust, it sounds like the two biggest things are being as you put it, owning the underperformance, because that will happen. We know that no fund or style ever outperforms forever. So there will be times when it's tough, and so that, owning that, because
Mhm.
that otherwise you'll get concerns that they maybe don't have that ability. And then on the other side, as you say, when things are going really well, being humble about that. And when you said it, I got sort of what's the word, like the horrible memories of some fund managers that come in and just talk about themselves being, the absolute bee's knees because they've outperformed for 3 years in a row. So have there been examples of funds where you've maybe walked out of the room and thought, yeah, we won't be going for them because they've just been a bit too show offy about their recent strong performance?
Yeah, there's definitely been some instances of that. I think more is when, somebody comes in, they've had great performance, and then they start, comparing themselves to other funds, maybe funds that
Mm.
they know you hold. Um,
Ooh,
yeah, I've had that as well. And saying, why they are much better, and, yeah, that doesn't usually go down particularly well.
that is, I mean, literally, if there were a golden rule, it would be that, right? Yeah, that, leave the comparison of funds to the fund selector.
Exactly.
Own your own thing. Yeah, really
Yeah.
important point. Really important point. All right. So talking about trust and passion, philosophy we can maybe come back to, but philosophy, passion and trust. I feel are quite interesting things that you've kind of articulated as the ones that you put the most importance on when you're thinking about investing. And I read that you studied sociology, and I don't always meet people that have studied sociology, and probably certainly not in our industry. And so I'm just interested that there feels like there's a bit of a thread with the kind of, you talked about being a good judge of character. Would love to just dig into that a bit to understand, are there things from a sociology perspective that give you tools that you can use as a fund selector to better judge characters?
Yeah, I think there is. When I studied sociology, I was looking at things like gender, race, identity, but also things like capitalism, research methods, statistics. So it is quite wide ranging. Some areas are certainly more directly relevant, like economic sociology, where you learn about commodity and labor markets, consumption and consumer culture. But then there's areas that maybe are less so relevant. So, I remember doing some modules in media and agriculture, but it certainly is more relevant than some might think. I mean, you just take behavioral finance, which has become so much more of a focus today, and that actually draws upon both sociology and psychology, and it's now recognized as being really important in the realms of finance. So I definitely think there are aspects of my sociology degree which I still carry through into not just my career and my day-to-day, but my personal life as well.
Nice. I have to say I didn't actually expect it to be as wide ranging as that. So that shows my naivety about sociology as a subject. So I guess it sounds like maybe there wasn't so much of a focus on on kind of that, more like the body language point that you made, and it sounds like maybe those are things that you've gone on a bit of a journey yourself, perhaps independently of the degree, to really kind of get a handle on, to be able to determine about trust and passion and things like that.
Yeah, I think so. I also think that perhaps maybe my background plays a lot to that. So I grew up abroad. I went to an international school. So I feel like I've met so many different people from so many different walks of life, and I think that also feeds into it as well.
All right, so let's talk about philosophy. So or philosophy, I should say, and and boutiques, because there aren't that many uh, clients that are open to investing in boutiques, but I know that Quilter Cheviot is an example of one that is. I'd love to understand. You talked about obviously trust and passion and philosophy. How does how does that fit with boutiques being something that you are open in? Do you feel that they are very much aligned? Would just be interested to get your thoughts on that.
Yeah, I think that there is something so interesting and so great about finding a boutique manager who, is really able to, yeah, as I was saying before, it just seems to all come back to this, passion and philosophy is, to really put that philosophy into practice in a process that they really truly believe in, and this is all they're doing, they're focusing on that. And it's not to say that I have anything against larger asset managers, of course not. I think there are some great funds at the larger asset managers as well, but I think there is something really special about finding a boutique manager who is doing things a little bit more differently, has their own edge. And yeah, I think that's a big part of what we do on a day-to-day basis. And when we do our trips out to various regions, is that is what we're trying to find, these people who are, yeah, just kind of doing things slightly differently, putting their own spin on it. And that's really interesting, not just for us, but also with regards to our clients. They want something that's a bit different, and hopefully we can find those hidden gems.
Nice. Well, let's come on to your trip. So I know from your writings and the podcast with Nick that you guys have gone on some really interesting trips in the last, I'm not sure how many years. But yeah, would be interested to know how that plays a part in your process. I guess you've already referenced that you like to, be in person with managers. So I guess that feels like that's probably a contributor, but would be interested to know more about, the types of managers that you're seeing. Are you seeing existing managers? Are you seeing new managers? You've referenced boutiques. Would be really interested to dig into your trips a bit more.
Yeah, so I've been on quite a few trips over the last few years, and I'd say the more recent ones, there's been much more of a focus on finding new and interesting managers. Um, 'Cause, don't get me wrong, it is always, of course, good to see our existing managers, but a lot of them do come through London, and a lot of them we've known for a long time. So, yeah, I think for the more recent trips that we've been doing, there has been much more of a focus on seeing what we can find, which is a little bit different, which isn't so well known out here, and so yeah, I would say that's been much more of a focus. We do sometimes, as I said, meet with existing managers, and one of the great things that we sometimes do as well is when we are meeting with some of our existing fund managers, is they might take us along with them to some of their company meetings, which is always so fascinating. Because obviously that's not something that we do on a day-to-day basis, but that just really adds to the level of the due diligence that we're doing, because we see firsthand exactly what our portfolio managers are asking companies. Again, we talk about asking our portfolio managers difficult questions, and they're doing exactly the same to their companies. So that's additional insight and due diligence that we do, and I always find that extremely fascinating. On some of the other trips we've done, we've sat down with macro strategists just to kind of get a bit more of an insight into what's going on the ground. Especially when looking at Asian emerging markets, or somewhere particularly like China, where policy is so important. Getting that extra understanding of what's really going on the ground is really, really helpful. And I know you can read that from through various newsletters and things that people put out, but as I was saying, it's just so much better to just be there and actually take it all in, and see a lot of these things happening. So again, when looking at Asian emerging markets, we tend to talk about a lot of the trends which are happening there, but to actually see them firsthand is so much more powerful.
Yeah, that resonates a lot. And yeah, would be interested. So thinking about the point that you made, around actually often it's seeing new managers rather than your existing. So when you're seeing new managers, are they typically funds being run out of the big houses overseas, or are you seeing boutiques over on your trips as well?
It tends to be more boutiques. Again, I kind of challenge myself to find things that I've never heard of before, out, or well, I've certainly not seen before, or maybe it was something that I or someone that I met with a long time ago. Some more recently were a boutique which was set up by somebody who left one of the larger asset managers. So, yeah, I really challenge myself to try and find new and interesting funds to meet with. And sometimes they don't have a structure that we can invest in at that point in time, but at least we've met with them. We can kind of keep them on our watch list, and see how that progresses, and hopefully in the future, if they decide to launch something that works for us, then we can be early investors, because we are very happy to do that as well. And yeah, so that is certainly something that I focus on when I'm planning the trips.
That's really interesting. So you're, as with every boutique investor, it was a topic that we discussed on the last podcast with Simon Evan Cook. We talked about, the fact that these early investors in these boutiques are getting great deals because, you are able to invest early when it makes a difference, and then it's what, worthwhile for that asset manager to give you a better deal. So it's a really interesting strategy. and not one that I have to say I didn't have the, necessarily the bandwidth to go and spend time meeting with clients that with managers rather who didn't even yet have a structure that was right. But it's really interesting that you do, and I can imagine that you get some fantastic opportunities to invest in a UCITS that, you're on the list of people that they message before it's even launched to say, will you be an early investor?
Yeah, exactly. We've actually got a couple in the pipeline from our recent trips out to Hong Kong and the US, and they are launching UCITS. And
Interesting.
uh, and so we've been doing a couple more meetings with them to see whether we can progress with those. So yeah, it's super exciting.
That is, yeah, that I love that. That's like boutiques next level, like getting ahead of them before they've even got the strategy or got the fund at least. So in relation to your trip, so you talked about, seeing the trends that you hear about, and obviously, you mentioned a trip to, you just said there was a trip to the US and there was a trip to, did you say Asia as well?
Yeah, so we went out to the US in April,
Hmm.
and we went to New York, Chicago, Toronto, Houston, and Austin. And then a month before that, I was in Mumbai for a week. And then in December, we were in Tokyo, Hong Kong, and Singapore.
Wow. So you've been a jet setter in the last
Yeah,
the
really
last
packed in.
12 months. um so so Mumbai for a week, lots of different places in North America, and then an Asia trip as well. Where did you get the most, where was most interesting?
Oh,
Hard
um,
question, probably. I'm sure they were all
yeah,
fascinating.
yeah, but they're all fascinating for different reasons. So, obviously, in the US, um, it was there was less of a focus when we were, which I found really interesting, and I did mention this on some of the podcasts that I did with Nick. But what we found really interesting was that that was much more of a focus on, the funds themselves and their underlying philosophies and that sort of thing, as opposed to the macro. There was very little macro conversations being had, whereas when you're in Asia, see, you're of course talking about the philosophy and the process and the team and all that sort of stuff, but there is a bit more of an emphasis on the macro there. Obviously, it's been very difficult being an investor in China over the last few years. So, one of the things I found really interesting, this was back in November when we were out in Hong Kong, was how, you know, there has been this question of, is China still investable? Whereas when we said that to, or asked the question to managers in Hong Kong, they almost laughed, thinking, well, no, of course China is investable, which I thought was really interesting, because they were just saying, and again, it might just be the proximity to China there, but they were saying, this is the world's second largest economy. It's so intertwined with global trade. I think, and it obviously became much more of a question after, Russia and Ukraine, and Russia then being excluded from the indices and things like that. But yeah, it just seemed almost like a silly question to them, which I thought was just fascinating. Um, but then again, going to somewhere like Mumbai for a week was just, the insights that I got from that trip. And I hadn't been to India in about 12 years. And just seeing all the things that people have been talking about like come to life, and just, yeah, again, so fascinating, because you hear about all the the growth that's happening in India, and you just have to go to Mumbai and see all the construction that's happening over there. And for me, having seen how much it changed in the last 12 years, yeah, it was really, really great to see that, you know these are trends that are actually happening, and it's not just people being overly optimistic about somewhere, particularly like India, because people weren't so positive on China anymore. And that's what a lot of people were saying. Oh, well, it's just because people who are investing in Asia, looking for growth, they're just shifting towards India. But that just, being there, I could see that it was so much more than that.
Nice. And you mentioned that you grew up in Asia. So I'd be interested to know how that, whether that has any impact on the way that you are able to select, or kind of identify opportunities when it comes to Asian or indeed emerging market strategies.
I'm not sure if it gives me any particular edge in that sense, but it definitely means that, again, with trends and things that are going on the ground, they resonate a lot more with me because so I grew up in Singapore and Thailand. So obviously Singapore being a developed economy and Thailand being developing. So I've kind of seen both of them. I've lived in both, and so yeah, I really understand and have lived through those development stages. And so there's a lot of things that people talk about, which yeah, I think just really resonates with me. And yeah, maybe that gives me a certain edge when investing in those markets. But it is actually one of the reasons why, when I was able to choose an area to specialize in, why I decided to go with Asian emerging markets. But yeah, I just find the whole area fascinating. And
I mean, gosh, yeah, as a part of the market, this term emerging markets, I mean, even Asia is a nonsense, really, isn't it? Because the underlying is just so complex and so
vastly.
differentiated. And actually, it's an interesting point that you made about, when you went on your US trip, you weren't thinking about macro because, what is there to really, what edge can you have there? Whereas actually in emerging markets, so much of it is about where you're looking to allocate and the sort of the intertwining trends as much as it is about the stocks that you're investing in.
Yeah, exactly. And I think that you know, we talk so much about bottom up stock selection, and that is something that we really look for in our funds as well. But when it comes to Asian emerging markets, a lot of these companies, or all of these companies, they don't operate in a vacuum. So there does have to be some consideration for the macro environment that they're operating in. So yeah, I think it is much more of a consideration when you're looking at Asian emerging markets, and that's also something that I love about it, is that you can add a bit of value there, whereas in the US it's yeah, the focus is less so on the macro.
Yeah, I remember going to India on a trip actually 10 years ago. So I can imagine it has changed a huge amount since then, which was very similar actually to what you talked about, where I went to quite a few company meetings, saw so much, you're kind of just constantly looking around, taking it all in. When you get the opportunity to go and have some food, you're really kind of just yeah, I just remember being so exhausted after the trip because it had been, it's not just the meetings like you would normally have right in your normal kind of day. It's like the whole time you're just absorbing.
Yeah, no, I was exactly the same. We were taking a minibus from meeting to meeting, and I was just stuck to the window with my phone, just filming everything, and just in case I missed something, so I could just watch it back later. And um, yeah, no, it is just, it's so fascinating, and all these places are so culturally different to here, and yeah, I loved it.
Nice. And so you have done a lot of trips in 12 months. Is that kind of a typical cadence to do, two trips to Asia and one trip to the US every year?
No, that is quite excessive. We don't usually do that many. It's just the way that it's fallen. We usually do, one US trip a year, and then maybe the next year we'll do an Asia trip. It's usually like that, but it's gotten a bit muddled since COVID, and yeah,
Yeah.
we couldn't do anything for quite some time. So just because of that, it seems that we had several trips in 6 months, so that's quite unusual.
Yeah, yeah. Okay. So more like one every year or so approximately.
Yeah,
Or
yeah,
one to
exactly.
two a year. Yeah, okay, makes sense. Nice. Cool. All right. Well, I think we're on to the questions for the last part of the podcast. So the first question is a book that genuinely changed the way that you think about things.
Yes, so I would have to say that for me, that book would be Tuesdays with Maury by Mitch Albom. So it's the author's memoir of meetings that he had with his sociology professor, Maury Schwartz, who was, very sadly dying from ALS. So Maury had been his sociology professor in college, and they had lost touch over a number of years. And then after seeing him being interviewed on TV, he gets back in touch with him. And every Tuesday for a number of weeks, they meet and discuss life and death. And I found it really moving, and so many parts of it and certain quotes just really resonated with me, and just really made me reflect on certain aspects of my life, my way of thinking, people I know, and I don't think I've read another book since that's made me feel that way. So that will always be quite a
Wow.
special one to me.
Wow, yeah, that's a big statement. Sounds like that's a much bigger kind of life altering
Yes,
book than perhaps some of the others that we might hear about on the Fund Selectors podcast. But I guess it feels like it's quite in line with your, the fact that you study sociology, your point about character. It feels like you've got this kind of bigger picture perspective, which sounds like I'm definitely going to go and buy that book. So thank you for that. Um, all right, so the next question comes from the previous guest, so from Simon Evan Cook, who asked, "What do you now think is right that you once thought was wrong?"
I would say trusting a gut feeling or my gut instinct, because I think that when I was starting out, I definitely felt like everything should be really, very scientific and, backed by numbers and everything like that. But as I've moved on with my career and gotten a bit more experience, as I was saying at the very beginning of the podcast, just realized how important kind of going with your gut instinct is, and it's definitely not something that I would have been comfortable saying a long time ago.
Yeah, that definitely resonates. The kind of the first the new hire, you or me or whoever it might be, thinks it's scientific, right? It's not art, it's
Exactly.
science. And then as you get more experience, you realize actually it's a huge amount of art as well as science.
Yeah.
And I really, on the kind of the gut instinct point, I think that, as you say, linking back to your earlier comments about trust, it's so it's such an underrated reality that our guts are generally trying to tell us something. And I would say, and I suspect you would agree, it's not like you would buy a fund on gut instinct, but you would certainly not buy a fund on gut instinct. Would you concur with that?
Definitely. Yeah. Yeah, yeah. It's not as if I would just meet with someone and say, "Oh, I like this person's so lovely, let's buy that." but but you could definitely meet with someone and just say, "Oh, it will, the process and everything stacks up and it sounds okay, but actually there's something that I'm feeling isn't quite right." And you never want to look back and think, "Oh, I felt like that wasn't right, and I didn't go with that." I would hate that.
Yeah, no, well, I think it's great that you've kind of, over the years, you've come to trust that part, because I think it is often a great teacher, or at least is trying to tell us something. Brilliant. Okay, thank you. Okay, so your last job is to set a question for our next guest, who you don't know who that is yet. But what question would you like our next guest to answer?
Oh, okay. I would like to ask them, what advice would you give to your younger self?
Ooh, that is, I'm going to have to ask that early in the podcast, in order to give whoever the next guest is the opportunity to fully answer that. Because yeah, if I was answering that, I'd be here all day. Um, but great, excellent question. Thank you very much. We'll be sure to ask that. Carly, thank you so much. It's been an absolute pleasure chatting. I've really enjoyed it. Appreciate you being guest number 2, and good luck with everything. It's been great to watch your career so far, and looking forward to seeing you continue to smash it.
Oh no, thank you so much for having me. It's been great.
My pleasure.